Morning, everybody. Happy St. Patrick's post St. Patrick's uh, Day. Chicago, Dan, I have to imagine Green River, Dan, a young Dan Sheridan just swimming in Green Rivers, pension people.
Swimming in healthy green dye
Yeah.
in the river. Whoever
Oh,
had
yeah.
that brilliant idea. Yeah, it's a beautiful time. Yeah, they had the parade Saturday. They had a nice parade in Knoxville on
Yeah.
Saturday downtown.
Yeah.
And
Yeah.
yeah,
Everybody wants to be Chicago.
yeah,
All right, let's get started.
yeah.
Every morning at 8:45 Eastern, Option Omega's got your back. Troy's dreaming big like LeBron, Matt's backtesting like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Option Omega, you're traded home, where every move makes you feel less alone. Makes you feel less
It's funny to me just thinking St. Patty's Day is obviously a religious festival. And the other one you think,
Yeah.
and I'm sure everybody in Chicago's celebrating it for religious purposes.
Oh, I'm sure with
Yes.
12-ounce cans next to it. Yeah.
Yeah, that's right. Yeah, I was thinking about like Marty Gross too. Like, what a funny concept of like the day before we get serious. let's
Oh yeah, yeah.
let
Right. Yeah.
let's go. That sounds very
Oh,
much
that is.
something.
You're right. It's a religious holiday
Yeah.
that has gone wild.
Well, speaking of religious holidays,
Yes.
it's bracket time
This
in
is the most
America.
exciting. Yeah.
I saw a thing a couple years ago that this is the number one time of the year for men to get vasectomies.
Wow.
And the theory is that
Matt,
they
you
get,
never knew that, did you, Matt?
I sure didn't, but I think I know where this is going. We're looking
They
for
get
some
the-
couch time with frozen peas here.
that's right. They get the vasectomy.
Wow.
They get the frozen peas, and then they get a week of just watching basketball all day.
Can
That's
I ask what's the
trade-off.
frozen peas thing? I don't.
People apparently it really does help to ice that area after a vasectomy,
Okay.
and so
Oh,
people get
okay.
the bag of frozen peas, and then they'll just kind of sit there with their
Oh my goodness.
frozen peas and watch Marquette or watch St.
Wow.
John's or something like that. So
Wow.
everybody, just we're not going to spend too much time on this. Pretty heartbreaking day in Knoxville yesterday. Lost the
Yeah.
SEC tournament.
Yeah.
But you can't. It's the climb, as Miley Cyrus says. It's about
Yeah.
the journey. And
That's
so
right.
and because of that, the only bracket you need to really pay attention to, you'll see at the bottom right there in very small.
That's all that matters. Yeah,
That's the only bracket there is, really. Those two.
That's
And
right.
so Tennessee, I have a friend of mine has a theory that Tennessee should have got the 2 seed, and that's what happened. That's easier for us than if we got the 1 seed. And I love that type of conspiracy thinking. I love that. That's what I'm
Yeah.
all about. That's what we do all day in the markets.
That's right.
So, any thoughts about who's your pick? Who's your number one? Who's winning the tournament this year, Dan? Matt?
Well, I'll start with just. I mean, what I found fascinating. I found myself last night for about 20 minutes Googling some of these schools I've never heard of. Like,
Oh, yeah.
I never heard of High Point. I didn't even know what a High Point was, but High Point's in the same conference as Winthrop. I looked, High Point is in North Carolina or something. And I'm like, that's what excites me about this tournament, that you get these schools you didn't even know existed.
Yeah.
and they're pretty darn good basketball teams. I mean, the only thing with that bracket, Troy, that you said with, I mean, what stands out to me is there's what, 14, is this right? 12 or 14 SEC teams in it?
14, I think.
14 SEC. How many Big
Crazy.
Ten? Big Ten, there's like
Yeah.
8 or 10. So I'm like, you can't, because I was making a comment today at Panera Bread. That's where we start the information gathering in the morning. And at Panera Bread, they were saying that, because I said, oh, it stinks. We're in the same bracket as Kentucky, and Kentucky's got our number, right? Got Tennessee's number. But you can't avoid with, 14 teams from the SEC, you're not going to avoid them at all. I'll tell you, if there's ever a crapshoot to pick a team on a given day, there's probably 20, 22 teams that could win this thing. But I mean, I like for Tennessee, I like the senior leadership. They play phenomenal defense, but I think it all comes down to you have one game where you can't hit your outside shot
for sure.
You're done. So I mean, it's Florida seems imposing. They got they got that huge front line.
9
I mean, those guys
10 guy. Yeah.
Oh yeah, 9.
Yeah.
I will crush you.
Yeah. I mean,
Matt,
I agree.
Any Indiana teams?
I mean, I'll be honest. I don't spend 2 seconds a year on college basketball. I don't have the time. But I mean, it is interesting. You look at, the teams that you've never heard of. Dan, are you saying you're not familiar with the Wolford Boss Terriers from South Carolina, the first round matchup for Tennessee? But I mean, I'd have to say I grew up SIU Edwardsville in the tournament. I don't know, maybe for the first time I've ever noticed. I didn't even know they were a tournament eligible school. So they're those small teams are fun. I mean, I always used to just pick North Carolina as a kid growing up. I don't even, are they even in the tournament? I see Wilmington, but where's UNC? They have to be a high
UNC
rank.
is like a bubble team, right, Troy? Aren't they one of the 4 teams that gets to play one of the 4 seeds?
I think that's right. UNC wasn't great this year.
They're terrible. They're 11th. Here's what's crazy. UNT Wilmington's a 14th seed, and UNC is an 11th seed.
Yeah,
and
they had a
off
year. Yeah.
Off year is right. So I'm hoping for the SIU Edwardsville number 16 seed to make a Cinderella run.
I like that.
Official guess.
My father-in-law is from Kentucky, grew up Kentucky, lives Kentucky, literally watches every Kentucky game. Like the sweetest grandparents in the world. But if you have a kid on his lap at like game time, he just slowly just hands child to it's game time. And he has something in his at his desk. It says basically, I'm for Kentucky, number 1, and whoever beats Duke, number 2.
Oh, that's it. That's
all
schools can say that.
So the other thing, last thing, we're not going to talk forever about this, but the last thing that's interesting is to your point about the crazy. I actually think March has gotten crazier, even more mad, as they say, because I think the way the game's played with 3-point shooter, how much these teams rely on 3-point shooting.
Oh yeah.
Makes for some insane games, because sudden you get a with all due respect, Matt, podunk college that doesn't belong.
the Wolford Boss Terriers don't belong. I don't know. Maybe they do. They're from
talking about
Carolina.
Yeah, I mean, you get a team like that. Belmont to me was always in Nashville, because we're from Tennessee. Belmont's one of those teams where it's like most people haven't heard of Belmont,
right?
But Belmont gets into the tourney every year almost, and they can do damage to someone
like Butler from Indiana.
Exactly. And so I think it's actually those teams get more of a chance now because of the way the game's played with 3-point shooting.
It's far more interesting to watch a High Point and Purdue matchup and think, well, 13-4 upsets happen. Never heard a High Point. I mean, some of these schools, you're right, like literally didn't even know there was a school with this name in existence. But hey, we're all about volatility, aren't we? And that's
good
volatility.
transition.
Good
That's why you play the
transition.
game.
I think if you hate our basketball takes, wait till you hear some of our options trades. That's the way I
right.
look at it.
That'd be worse.
So this week, the week ahead, what do we got this week?
Well, you've got, yes,
Mr. Powell.
Mr. Powell on Wednesday, and then I think what's the consensus, guys, that he's not going to, they're not going to do anything with the rates, but it should be interesting when you talk about how careful you better be with your words.
Oh my gosh!
At 2:30 Eastern, every word better be measured very carefully.
Oh yeah,
because that's where the fireworks. I mean, you have initial claims on Thursday and existing home sales. To me, not this coming week, the week after. I think a Fed thing, March 28th, you have the PCE. So that kind of takes you on a Friday, the next 2 weeks. The only other earnings, I think you have Nike, Federal Express, and Micron this week. Nothing huge other than the big Fed day on Wednesday. But as you said, real quick, VIX is the name of the game. And if I could just point out a couple quick things on VIX. When you look, to me, the story of all this started on Thursday. Because when you look Thursday, when we hit the lows of 55, near 5,500 in the market, that's when we were down 10%. The correction bells go off. You know, you're at the correction number. But you know what? VIX was saying, I'm done with you, right?
Yeah.
Or as Mr. Wonderful would say, you're dead to me.
Yeah.
And because VIX was 24.36. And when you think about it, earlier in the week, VIX hit 29 on Tuesday, and the SPX was higher. So by Thursday, we're 5,500, and VIX is really doing not much. Now, the only thing, so to me, the story is, if you would have told me VIX is closed at 22 or under 22, around 22, that's a huge 7 points from the highs on Tuesday. And again, I just think VIX starting this Thursday, it's just unimpressed with this down, enough of the tariff. We got it. It's discounted in the market. Move on with your life. And now I think we're at VIX 22. I mean, the only thing you could say, maybe some of the shorter term moving averages, like the 9-day, we didn't go exponential moving average, whatever short term thing you look at. I was just reading over the weekend, some of the folk, well, we didn't go over this, but it looks like at the opening today, or it looks like ES or the futures right now could be staying up a little bit. So,
flat,
it's sure you could say, I mean, two other things you could say, yes, 2022, we had more than 10%, and that can surely happen. I think it's still early in that thing. But always remember, folks, just like Friday showed you, when you have 600 points down, which we did, the 10% correction was 643 points down, you're going to have rip your face off rallies, right? It's just part of it. You're not going to recover 10 points a day in the SPX. So I think coming into this week, the VIX still is pretty amazing that, that fear that the VIX saying, I'm not impressed on Thursday, just carried through into Friday. And, how we go from the end of the world with a 29 VIX on Tuesday to Thursday, what's the problem?
Yeah.
So Matt, what are you seeing?
Yeah, I agree. I mean, it's it is all about the VIX. And when you look at we had that was like a face melter on Friday. Like, I didn't realize the scope of the up move, but VIX also basically compressed from nearly 30 to nearly 20 in a very short amount of time. And you look at the move in the market, percentage wise, I mean, we're around 56.50. I mean, we've been in this area for a while, but especially those far out option prices, VIX is everything. So agreed.
You could tell Thursday too, like you're saying, Dan, like it was getting to the point where those moves, I mean, like we were down, 80 or something
Yeah.
Thursday. And the VIX had just like, I mean, it was unchanged basically.
Yep.
It's like, and so
It
you
had
just
run its course.
can't sustain that, and so, all right, this is what I want to do, if it's all right. I want to look at a trade that is an old friend of the show called a double calendar. And we have used double calendars for years now. Options involve risk, not so for all investors. But everything we're talking about is backward looking, not forward looking. Consult with your financial advisor. But we have traded double calendars a lot. A lot of us have through the years, and found them to be a joy and an honor to put them on. But I've noticed this one in particular that Dan's going to talk about. It has won a lot, but it's had a drawdown the last year, really. And I wanted to maybe talk about double calendars for those who have never traded them, and maybe some things to think through and things to look at. So, Dan, I'm going to hand it over to you. What is a double calendar?
Yes, a double calendar. First of all, can you see my screen and the little bit of annotation on here?
Yep.
Okay. So a double calendar is something that a lot of folk, not that you can't use it a far out duration, but you simply have a bullish calendar. So we're, as of the close on Friday, around 56.40. So you're putting a call calendar in this situation up 100 points. So that would be a bullish calendar. And again, for those of you who aren't familiar with calendars, a calendar is simply a mixed month spread where your long leg is further out than your short leg, and it's the same strike. So you have a bullish call calendar, a bearish put calendar. Troy, you know what? I want to make sure I have this right. This would be buying the Wednesday, selling the Friday. Okay, so I'd be buying the 21st, right? Yes. Okay. I'm glad I got that.
Selling the Wednesday, buying the Friday.
Yeah. So selling March 19th. I got that right.
Yeah.
And then buying March 21 weekly. So if you look at this example here, folks, this is, as they say, you're ready for the move. So we have the short strike in the call calendar up 100 points. The short strike on the put calendar down 100. The expected move, if you look at the expected move in 2 days, right? If you look here, I think this is like one standard deviation is 100 points. So what does that mean in English? It just means there's a 68% probability we're going to be between our short strikes, 57.35 and 55.35 in the next 2 days. So again, we just put our call calendar up near the expected move, about a 20 delta, I believe Troy used in the back testing, and a 20 delta put. So you're giving up the middle, right? It's like a football, hey, we're going to give up the short pass. We want to protect the long pass.
That's right.
Here, we're going for the long game. We're saying we're going to move these little crevices here. All we need the market to move about 30 points, right? Which I would think we're going to get some kind of movement this week. And so as long as we get to Wednesday, which is the Fed day, in this area, the blue is what the graph is going to look like on Wednesday. The purple is today. So this is a nice trade. It costs, this says about $22 on the trade. Your deltas are pretty close to neutral, a little bit long, positive theta, big time theta, and you do have some volatility risk. That is your risk because you're long Vega. But these perform well because they can handle a bigger move when you put them out like a 20 delta. And so you give up the middle. If we weren't thinking it could be a bigger move, then we might put the deltas from a 20 to a 30. And you could see if I brought in the wings, let's say we brought in the wings 20 points on each side, 57.35 to 57.15 on the upside, and 55.35 to 55.55 on the downside, well, then you're going to regain, right? Then you're going to regain a little bit of the middle. Like you're saying, hey, now we want to stop the short pass, right? So you can set it up how you'd like. And so ultimately what it is you're looking for a move, but you have positive theta. And you're, so anyways, that's the double calendar, very good. And remember, and I think it's always good to, what did they say, Troy and the Godfather? Know your friends, but know your enemies better.
Yeah, keep your enemies closer.
Keep your enemies closer. And so if you relate that with options, your biggest risk, which you have to be, if you say, Dan, what should I focus on? Where is my enemy? It's Vega, right? It's volatility. Well, it's volatility, volatility coming down, and then an unusual price movement, much more than the expected move. And that's where we'll bring it over to Troy, where he can talk about, he has that kind of taken care of because he has some parameters. If it did move too far, like too far outside of the short strikes here, then he's going to cry uncle and close it down. But I think this is a very effective trade for 2 to 9 days from duration. If you're going to go, to me, I like, if I'm going to go 15, 20 days out on a calendar, I'd rather start with a single. But when you're in that 2 to 10 day or 1 to 10 day or 0 to 10 day, I like the double. Just gives you more room to start out with. So
and on a double, Dan, what can hurt you? Like, what are the things to look out for?
Too big of a price move. Like I look at the short, if you look, let me just clean this up a little bit. But if you look at the short strike, here's your short strike. Here's your expiration break even. Upside, short strike, expiration break even. If you start moving too much, when you start getting halfway between the short strike and expiration break even on the price, you can see the curve, you're going to start losing. So I think too big of a price move past the short strike, number one. And number two, the volatility coming down during the trade. Because remember, folks, what does, on a mixed month trade, what is the effect of volatility decreasing? It's going to bring in your break evens, and it's going to sink the Titanic. This thing's coming down, right? Yeah. So that's where you're saying, that's when you start calling your brokerage firm at 2 a.m. saying, hey, I had Theta. Where is my Theta? And they answer back, get a life, go read an option book, right? The volatility going down. So I think right now, 22 volatility, and where we're going to kind of open or somewhere around there, is in the upper end of the range. But I think for what's going on in the market right now, I don't think this is a horrible idea right now. The only other thing I would say is, on your longs, if you're concerned with the volatility coming down, this is a double calendar, take your longs and go 10 points further out of the money. And that will turn it in from a double calendar to a double diagonal, and that will give you less volatility risk.
Diagonalize it. We'll spend some time on diagonals in upcoming shows, because I think they're having looked at a bunch of backtests the last 3 years and seeing, I think they're one of the least utilized trades and perhaps least understood trades.
Yeah.
So let me show you real quick what this looks like, what Dan just did. That's the graph. That's what he's talking about. This is the backtest of it. And it's ran from the advent of SPX Daily, so May of 2022. And like Dan said, I'm doing it a little different here. He did it in SPX. I'm going to show you in Qs just to show you the concept. I think is pretty interesting. So this is a 20 delta, and you're selling the 20 delta call and the 20 delta put, and you're putting it on every Friday. And you putting it on, you could test different times. This is just one that we put on. Open it around 12:55. And you'll notice in this this test that I'm allocating 50% of the portfolio. We're not going to want to do that. And I'll explain why here in a second. And then we're exiting the only exit is using leg deltas. I want to show you the deltas. The deltas are basically the put and the call are a 20 delta, so you're starting at 20 delta and you're getting out if it's got in the money. So basically you're getting out of that put if it's above 75, and you're getting out of the short call if it goes below 70. And that's probably too far, honestly, but just for testing purposes, it's worth talking about. So you'll notice that if you do a 50% allocation, you make a lot of money. But here's the thing that you don't want is a pretty big drawdown. So first initial thoughts. Matt, you look at testing all day. What do you see from a test like this? What's your first kind of go-to?
Yeah, so a couple things. First of all, the 50% allocation. So why, as Troy said, this is not financial advice, but in general, people aren't going to allocate 50% of their portfolio on a single backtest that could go to 0 or negative, right? Yeah. Yes. So why would you backtest at that? The really good reason to backtest that is you can see drawdown potential. So with a 50% portfolio allocation, you can see a 56% drawdown. How many people are going to trade through a 56% drawdown?
I know I wouldn't.
Probably not a lot.
Yeah.
The other interesting thing with this, and people, a lot of times actually brokers might prefer calendars on assignable tickers like QQQ or SPY or whatever. Here's a more extreme version with an 86% drawdown when you full port this. But you can do calendars on any ticker, and so this one is interesting. There's a really healthy amount of slippage on it. One of the main reasons people don't trade DCs on QQQ or SPY or IWM and might look to trade it on something like SPX is because of not only the assignment or lack thereof, but also the fees. So $1 for fees is probably going to cover your opening and closing fees on QQQ or close. Some of the lower cost brokers, it would actually probably be significantly less than that. So it's an interesting backtest. I have traded many DCs and continue to trade many DCs. And it's nice that the 5.7 has been in existence for a very long time, and not all DCs are created equal. One comment you guys made earlier that I think is really underappreciated and be my final take is that you can set up DCs a bunch of different ways. And so a 20 delta DC is going to be a very different trade than a 45 delta DC. That's right. And they are looking to do completely different things. And so one of the things that's a little bit frustrating to me, although I understand and I do it as well, is when people say X type of trade is doing well or poorly. And it's like, RICs have become popular and whatever. So people will say RICs haven't been working. And they're all just using, maybe they saw a YouTube video with a really ridiculously good looking presenter talking about an at the money reverse iron fly. And that's the only RIC they're doing. Well, there's an infinite variety of RICs, just like there's an infinite variety of DCs. As Troy said, there was a time in 2022 when people were trading 10, 15 delta DCs because vol was so sticky and they were doing very well with them. That's obviously a very, very different trade than a 30 delta, 40 delta, even a 25 delta DC. So super interesting.
Yeah. Dan, do you have any thoughts about that?
Yeah, I think what Matt hit at is an important point, which leads to, yes, as you're trading, you're becoming a, folk in the options omega community that have become good craftsmen with the double calendar. You become, the way you kind of tweak is you become aware of what's the market giving you now. Like Matt said, in 2022, volatility was higher, right? That's stickier, higher. I'm getting the what was higher. So you could go out to a 15 delta, but there's other times you might want to be closer in, and there's infinite ways to do it. Just like there's infinite ways to do, when you think of the concept of 2 to 8 days out or 1 to 8 days out, this concept of a double calendar. There's more people in the family than the double calendar. There's other children. The other children are double diagonal, double long diagonal. Yeah. Technically, an iron condor or a, those are doubles where, to me, they have the same mother and father. The same mother and father is called the short strangle, right? They all have that same foundation. So there's 5 or 6 of those things. And I think if someone's really, into the double calendar, and I think it's a wonderful trade, learn about the other family members in that relationship, because they work well. And sometimes you could, hey, this one might be working better, but I think it's, but there's also something to be said with, the more you stick with one strategy, you get very good at it. And I think, so there's different things.
Yeah, no, I think that's right. And 2 things with this type of trade, when you're looking at testing, or if you're new to back testing and you're like, what the heck is that? It's a tool we use, basically. We built Option Omega, and you can go there and check out the YouTube stuff, but to see everything. But the thing that's interesting about this type of trade is you look at the way you kind of construct these back tests to build rigidity, to build confidence, is you look at a full port. So you can say, okay, full port, we're going to 0. In this case, full porting looks theoretically like you do okay with a 90% drawdown, which you're not doing okay with a 90% drawdown, I promise you. But then you you try to make it more realistic. So this is a 5% allocation. What do you do with a 5% allocation? You drastically reduce your drawdown. You keep your MAR ratio, really healthy. Yeah. And, this looks like a good trade. I mean, again, I'm not advocating to trade this, but I'm saying this is a good back test. Now, how do you improve upon this?
Yes.
Things that you could do to improve upon this. And again, we do this too. I was telling them the other day, like, I back tested for 8 hours the other day just because I was looking at a portfolio of strategies and I wanted to test a bunch of stuff. But this is the thing I'd look at. If you want to play along at home and you see this and you're like, I'm going to build this out. Look at the Qs and you say, well, we've had a drawdown this year, right? And you would think a double calendar, you go into it with like a schoolboy knowledge of it and say, well, double calendars are long volatility. Why am I losing on when we're having long volatility? Yeah. Well, in this case, the deltas, I'm letting the delta go way past the strike before I adjust. So that would be something you could adjust. You also might want to look at this and say, hey, what was the VIX during this time period? And you might want to play around and say, I don't want to put this on if the VIX is over 25. Now, I bet that's not the case because I don't think in February we were anywhere near 25. But we have a lot of stuff in there to where you can go through here and try to fine-tooth comb it. And there's a trade-off in that. You got to make sure that you're not overfitting.
That's right.
I see tests all the time. They're like, this has a 100% win rate. If you trade it, X amount when the moon rises, and you don't, and you end up kind of making a trade that's not realistic. And so I'm not advocating for overfitting, but I am saying if you notice trends, and you start kind of here, if you notice trends and there's periods of drawdown, go to that specific period and see if there's a way to improve that period. Then go back, run the full test again. Did you take out too many dates because you've been filtering something to improve that specific period? It's a dance that you end up doing in this. Because as Matt said, there's other DCs that have been working really, really well this year.
Yeah.
And so Dan, does that make sense at all? What do you think of it?
I think it's, and that's why I think the backtesting tool is a phenomenal educational tool, because that's where I would focus. You can look at, okay, here's the bad periods. We'll analyze them. Go look at those bad periods. What was the VIX? Where was the SPX? What happened? And see, and it gets you thinking. So you're learning along the way. As I've been using the Options Omega backtesting tool, strategies that I've been doing for 2, 3, 4 years, I'm already starting to tweak them a little bit, because I didn't realize, you're trading them every day. But hey, if I do this little tweak, like I was talking with Matt about, or Troy about a balanced butterfly, which I was going to do a video on this week, but just tweaking I'd always be more set trying to make a 10% profit. And they're like, well, it tests better at 15. And so, you have to be, that's the other thing. You have to be open that, hey, I can improve something. And that's where our egos have to say, wait a second, just because I invented the chocolate chip cookie or whatever, somebody could say on a particular strategy, not invent it, but you started trading a particular strategy and you get pretty confident in it. There's always room for improvement. I've seen through the years just with different students, if you're working together, and you can always can make something better, right? And that's what that's what the backtesting tool is for, to make it even better. I mean, think about how many people you have in the community doing double calendars. It's like a feeding frenzy, like a piranhas, and they're making it better, right? Yeah. Because they're saying, and that's the exciting thing to me is, when people work together, it's like the video it's like the Options Omega video, where I still get a kick out of the two guys with the rope working together. How happy that still tickles me every time I see
that's what I think I just see ourselves as I see the three of us as older Asian men just helping each other with these ropes. That's the way I look at it. So with that being said, guys, hope you have a great day. Good trading to you today, and we'll be back tomorrow morning. We'll have things we'll want to talk about. Yeah, I'm sure you will too, as Mr. Rogers says. So have a good day, and we will talk to you guys soon.